Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and today I'm going to be covering the FTSE 100 futures. All right, let's take a look at the FTSE, the UK 100. So we're still in a tight trading range. We've got these high time frame measured moves. We've hit them, we're going sideways, and we're hovering between those two areas. The bulls were able to get a strong breakout up on the monthly chart. Bears not able to completely close the gap. And now the moving average is nearly up at the previous all-time high. So great for bulls. Bulls can buy and buy lower, knowing they've got the moving average below. But no one wants to buy above 8,400 at the moment. There are a couple more targets I have above. There was an 00 here, an expanding triangle. If this is a trading range, trading ranges usually get a measured move. It can go up, it can go down. The more time we spend up here, the less chance I think we've got of going down. There are still a couple of open gaps. This one down here at 7,100 probably won't get closed. This is the second last gap, so that's got a higher chance. Bears were not able to close back in this range, and you can see if I put a box there, that could be some kind of a measuring gap for later. If we took these lows, for example, fib tool in the middle of that measured move, then we might even have a target up here. 3 legs up, everyone can see that, but look what happened here when the chart was here. This looked like a wedge for some traders. It's a dueling lines pattern, a wedge to a potential double top, pulled back to the moving average, tried to break below, formed a high 2. The high 2 triggered. Now this is a problem for bears. If traders are not going to sell below the moving average, the next logical place for them to sell is above the high and higher. You can see those limit order bears now have to get out, and then we break out to the upside. So now we're doing a similar pattern. We're pulling back sideways to the moving average, and the question is, what's going to happen? Now, this buy was at the moving average, this buy was at the moving average, so I think we're actually a little bit too high, but now we've triggered that buy signal. I'm expecting buyers below around 8,000. Anyone buying here, tight trading range, disappointing entry bar so far, it can come down here. You can see this entry bar here triggered, and if you bought below, no problem. Now that's not going to work all the time, but if you bought more and you had the option of another position down here, you can see now you're at a breakout point. So you've got great buying opportunity, I think, as it pulls into that range, likely to do this kind of pattern. I think unlikely to go directly up, unlikely to go directly down, more likely to go sideways with limit order traders, and that's on the monthly chart. So what about FTSE on the weekly chart? Well, that tight trading range on the higher time frame looks like this. Very strong spike, a couple of legs sideways. Now we've got 3 bull closes above the moving average. We did it here once. Now we're doing it a second time. And the more bulls can do this, the less likely bears are going to hold for a swing down. This was a really good opportunity for bears, but I wasn't too concerned because there were so many gaps below. We hugged the moving average all the way up here. The first time the bears can do this, this was actually a moving average gap bar. Traders who bought 1 tick above that bar got 1-to-1 up. Now you've got a strong buy signal, weak follow through, and this is to be expected. You look left, it's a tight trading range. What do you do here? Well, trading ranges often have 2 moves. This is one, this is a pullback. I think the bulls are going to expect 1 more weekly bull bar at least. There's a monthly high one, the highest high one. Okay, that's the highest stop entry on the monthly chart. When we were down here, I was surprised that they didn't get let out, and I was secretly looking to buy because that's a really good target. If bulls take a reasonable entry in a bull trend, usually the first attempt to reverse doesn't work because those bulls are still scaling in. It's only once all those bulls hit sell to close their positions, they usually get the momentum to reverse down. And that's how you get a double top or a wedge top, I think. So I think there's more to go up. We triggered the stop entry above this bar, bad entry bar, but what happened to the bears? You can see here, we went above a bull bar. The close is not good enough. Traders decided to exit by the moving average instead. So we might get a similar pattern here, breakout, pullback. Now there's a gap, and that's a really good target in a trading range. This is a bear micro channel. If a trader sells above this or sells above that, they should at least get to their midpoint. Often they'll get back to that entry. So I think we'll probably go to the moving average, and I think we'll go up and hit that target. We can do it in 1 bar if it's an outside bar. That would be very trading rangey, but I'm not looking to sell below that bar next week on FTSE. So I think sideways to up on FTSE as well on the weekly chart. What about FTSE on the daily chart? Well, we had a spike and a pullback. This is the start of the channel. And I said last week, even if we break out of this channel, it's more likely we'll just test this channel and go sideways to up. Here are the 5 days. That was the first high one buy triggered. That was the second high one. Go above, go below, let those traders out. Now we pull back to the channel. We've got another buy signal triggered sideways. So this could be a form of 2-leg or 3-legged pullback, a high 2 or a high 3 at the moving average. Lots of sideways here. So it looks like anytime there's a stop entry, we reverse and we come back to it. I can get rid of that channel now. Currently the bulls have a big gap here, but gaps can close. You look over here, we shot right through it. So they don't work as well as gaps in trends. We filled it, went back up. Bulls want to keep this gap open, drift up and maybe test the all-time highs. But look left at all the sells that worked at this price. I think bulls feel safer around the daily moving average, betting they can buy and buy lower and get back to it. If you bought above the moving average here, bought below that bar, scaled into the lows here, you can make money. Scaled into the lows here, you can make money. If you're a bear and you sell down here, selling above a bear bar, I think this is going to continue. Not a great signal for a long on Friday. It's a pullback, part of this bigger pullback. I think we're probably just going to go sideways because we're still above both moving averages. I've got to give the probability to the bulls. So I think it's a buy and buy lower or a sell higher, not looking to sell on a stop. And that's FTSE for next week on the daily chart. Each week, I review the price action on the higher time frame charts, get an idea for day traders how to position themselves for next week. Each week, I usually take a different flavor to approach the weekly report. I bring in some element of price action to focus on, so it's a learning opportunity for traders. Well, thank you very much for watching. I hope you found that valuable. If you've got any further questions, please feel free to put them in the comments below. For those of you on the Brooks Price Action Discord, you can also reach me on there under Tim F. Otherwise, please tune into my channel. I'll be posting new videos through the week. Have a great trading week, and I'll see you next weekend.